Welcome to Smart Stock Watch. Today is March 28th, 2025, and we're diving into the latest earnings report from Cheche, China's leading auto insurance technology platform. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Cheche has just released their unaudited financial results for the fourth quarter and full year of 2024, and there's a lot to unpack, especially with their strategic focus on the NEV market.
Revenue and profitability overview. Let's start with the top line. Cheche reported a net revenue of $134.8 million for the fourth quarter, which is a 13.4% increase year over year. For the full year, revenue reached $475.8 million, up 5.2%. John, what are your thoughts on these figures?
These numbers are quite impressive, especially the quarterly growth. The increase in revenue is largely driven by the rise in insurance transactions through Cheche's platform. Moreover, the operating loss for the quarter decreased significantly by 93.7% to just $0.4 million, and they even reported an adjusted operating income of $0.2 million, which is a positive turnaround from the previous year's loss.
NEV market expansion. Cheche's expansion into the new energy vehicle e-market seems to be a significant growth driver. Can you elaborate on their performance in this sector?
Absolutely. Cheche's NEV-related business has shown remarkable growth, with written premiums increasing by 171.1% year over year to $189.8 million for the quarter. They have established 15 partnerships with NEV companies, resulting in 441,000 embedded policies, which is an increase of 184.5% compared to the previous year. This sector is clearly a key area of growth for Cheche.
Cost management and operational efficiency. Cheche has also made strides in cost management. How have they managed to improve their operational efficiency?
Cheche has significantly reduced their expenses across the board. Selling and marketing expenses decreased by $20.7 million, and general and administrative expenses were cut by 53.2% to $3.5 million. Research and development expenses also saw a reduction of 25.3% to $1.3 million. These reductions are primarily due to lower marketing and staff costs, as well as decreased share-based compensation expenses.
Future outlook and strategic initiatives. Looking ahead, what can we expect from Cheche in 2025?
Cheche is projecting net revenues between $3.6 billion and $3.8 billion for 2025, which represents a growth of 3.7% to 9.4%. They also expect NEV written premiums to grow by 112% to 142%. Importantly, they anticipate shifting from a loss to a profit in their adjusted operating results, which is a strong indicator of their strategic focus and operational improvements.
Key takeaways. In summary, Cheche has delivered a strong performance in the fourth quarter and full year of 2024, with significant revenue growth and cost reductions. Their strategic focus on the NEV market is paying off, and they are well positioned for continued success in 2025. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Cheche's impressive results and future prospects.
Thank you to our viewers for watching. If you enjoyed this analysis, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Cheche's performance in the comments below. Until next time.